Hey guys, what's up? In this video, I want to show you how I trade SPY options on a small account and was able to make 10% this month. So in the month of April, I ended up making about 10.33%. Again, the end of the day is not over, so it could be a bit lower, could be a slightly bit more, but roughly 10% this month, and roughly we're at 27, almost 28% year to date. So if you want to learn exactly how I do this with a small account, less than $1,000, I'm going to walk you through exactly what I do. So number one, what I do is I trade credit spreads. If you have no idea what credit spreads are, it's a simple strategy like this, where you go in and you look at highly liquid stocks. So for instance, I trade SPY, I trade IWM, I trade DIA, TLT, QQQ, GLD, stuff like this. Let's go into an example of a stock that I do not own a position on. So I currently have a SPY and TLT spread on, so let's look at, let's say, DIA. So if we're looking at DIA, the way we set this trade up is I simply go on to my broker. Right now I'm using Robinhood. I go on to trade DIA options, and from here I go on to Builder. And from Builder, I select Put Credit Spread, which is under the Vertical Credit Spread section. I'm about to explain how this works here in a second, but I want to show you the profit chart so that it makes more sense. What I do is I go out on my expiration date. I look for anything close to 14 or a little over. So anyways, May 12th looks like we're about 14 days out. So that means a 14-day DTE. So I click on that. Now we have a 14-day DTE. We're going to look at where the stock price is currently. Oh, here we go. We need to shift this to a dollar wide spread. Here we go. So the stock is currently trading right here. I want to go out to a price point where I think the stock won't hit. So what I'm doing is I'm looking for the stock to move higher. I make money with put credit spreads when the stock goes up. So for instance, let me just pull up a trading view chart right now. Trading view. Sorry about this. Should have had this pre-made already, but you know, we work with it. So what we do is let's go on to the stock symbol DIA. So that's the one that we're looking at. A put credit spread makes money when you stay above that level. Let's say I like this level because it dipped down to here and then it came back up. So let's say we have a level of 332. All right, so 332 is now our level. So I make money in this trade if the stock basically stays above this by our expiration date, which is roughly 14 days out. So this means that I make money if the stock goes up. I make money if the stock is flat. I make money if the stock goes down, as long as it doesn't go below this level. So I make money way more ways than a stock trader could make money. But also, the reason why I love this trade is because it has defined risk. I know what I'm going to lose. Unlike if you were to buy a call contract to make money on the upside, not only could you not make money if the stock dropped, but you would also be losing a lot because options values decay a lot over time. And so you'd be losing a lot of money, and instead of making money in these three different ways, you would have to make money only if the stock went instantly up, which is hard to predict. So let's go down. Let's say, okay, this is 332. That looks like a solid level. Let's give ourselves some more room. Let's say 331 is our level. So we're gonna go down to here to 331.30. You can see here this is 331.30. So I would go here. Now look, you can see here that the total credit's about 8. That's not something we want to do. You ideally want to, the total credit says 7. This also says 11, 12. I don't know exactly where it's sitting. Let's just take these numbers, for example. What you ideally want to target, though, is you ideally want to target a 15-cent credit. So again, you can come here 15 cents, and that kind of shows you what you're going to target, 15, 14 cents, something like that. So anyways, this is the trade that you're putting on. You're going to make 15 cents, and how this works is the stock price is currently trading at this little level. If you go up, you make money. If it goes down, you make money. If it stays the same, you make money. You put this trade on, and you move on. That's how simple this trade is. So again, guys, you're really just looking, where do I think this stock will not go above, and then placing a trade like that. Again, you can do this by a ton of different ways, like Delta, by using technical analysis to determine your levels, or my favorite, you can simply just wake up and do it yourself. So if you go to app.10%creditspreads.com, you can actually scroll down to the bottom of this page and click on test our alerts, and I'll send you 3 alerts for free that I'm personally taking. But these alerts come from the dashboard, which shows you exactly what to do. Based on historical win rates, it shows you what your win rate is. So if you want a win rate of over 90%, which is insane and nobody else is getting, plus you can also see your annualized return based on actual performance. That's about a 21% return a year. That means you can almost 3x the market return just by taking this trade. So it tells you DIA, it tells you the expiration date, it tells you the levels, and it tells you how much credit to collect. It tells you everything you want to know all in one place. So if you want to learn more about this or get 3 free trades, click the link in the description below. These are the exact trades that I've been using and following to grow my account by 10% in April, but throughout year to date, about 27, almost 28%. Anyways, guys, if you enjoyed this video, smash that subscribe button. I am your credit spreads expert, and I share a ton of videos on how to trade credit spreads and so much more. So smash that thumbs up button and subscribe button. I'll see you in the next video.